Florida Prepaid and Florida 529 college savings plans. Those programs have helped over 1.2 million Floridians save for higher education expenses since the 80s. And so now they're helping the disability population save through Able United. So benefits of an Able account, and really, I mean, at the end of the day, it's a financial product that this program offers. It's unique in that the ownership is that belongs to the individual with a disability, but somebody else can open and manage it on their behalf. Also, the financial flexibility. Funds in the Able account are generally disregarded when determining SSI and Medicaid services. So if you think of iBudget waiver, SSI, those both restrict typically individuals to only having $2,000 in assets. Not a lot of money. Now they can save more than that in an Able account. And then family and friends can help too, and then not count as income. Those funds could also have unique tax benefits like tax-free growth and being able to expend it without having to worry about jeopardizing those public benefits. And we'll talk in more detail on all these areas. So I did want to clarify, we are not the Able Trust. So a lot of people think Able accounts, they start saying Able Trust, and then there's confusion because Able Trust is a different entity altogether. They're actually a direct support organization of the vocational rehabilitation, so VR. So they're very much employment focused. So helping individuals since 1990, helping individuals in support employment and working with agencies that serve in that capacity. And we are savings focused. So we're Able accounts, not the Able Trust, even though similar name. And we live on the same street now. They actually just moved their office down the road from me. So even closer. And what I love about this program is when it started, its history was in the Down syndrome community, specifically National Down Syndrome of Congress. And there were some autism groups, but usually it started with some family members that are sitting around a dining room table and saying, you know, why isn't there a way for me to start saving for my loved one without negatively impacting their future? And so one of those individuals at that dining room table was Jen Sikora here on the top left. She was our first Able United account holder, and her son Sean. And you know, she started pushing this legislation in the early 2000s. And so finally, through her hard work and advocacy, it is now in existence. And so, but other individuals kind of utilize this account as well. So whether that be individuals with cerebral palsy or anybody under the iBudget waiver qualify, but it can be used for example, Alicia here is saving for a wheelchair accessible van, or even Elliot here on the top right with his mom, Sandra, who's, you know, he's not relying on public benefits, but uses the funds in the account to help offset some of his DJing costs, which he likes to do as a side business. So pretty cool and different how individuals use it. And then we're going to talk about really who's eligible to own and operate this account. And so I want to go ahead and just remind anybody, if they have questions, feel free to put that in the chat box and we can answer those as we go along. So who's actually eligible to have an account? And so it's unique in that an individual can only have one Able account nationwide. So although if you think of other financial products, checking, savings account, retirement accounts where you can have multiple, unfortunately, individuals with disabilities can only have one Able account. So keep that in mind, especially if people move out of the state or coming in from another state, they may want to transfer or roll over their Able account. Our program is unique in that since we are the state of Florida's program, we're only open to Florida residents at the time they apply. If they move out of the state after, they can always take the Able United account with them, as this is an online type of product. The next two requirements are true for all Able programs. One is the disability had to have a diagnosis prior to age 26, so that onset. Doesn't matter their age now. We have a handful of ARCs that have set up Able accounts for some of the people they serve. And, you know, the age ranges from newborns up to individuals in their 80s. So, but the main thing is having that diagnosis as a prior to age 26, which is actually going up to age 46 in 2026. Very confusing. But when that age goes up, it will broaden some of the disability categories that we've been able to serve, like mental health. And also that the disability has to be severe. So it's not just somebody who, broke an arm or something that's going to cause them where they're going to get over their type of disability. But this is really individuals who are going to have a severe disability that's going to last at least 12 months, going to impact their daily living. Individuals who are receiving SSI or SSDI, they automatically qualify, so they meet that severity language. If they don't, the regulations basically say, okay, well, you have to meet that requirement, although you're not receiving it. And so the terminology they use is just marked and severe functional limitations. And the good thing is the IRS did put out kind of the list of disabilities. And I know that since we're with the ARCs, everybody you serve is going to qualify. I mean, it's autism, intellectual disability, cerebral palsy, spina bifida, and you can see even some more unique ones like Edwards syndrome, severe ADHD, and a lot of mental health like schizophrenia, PTSD. So it's a very broad types of disabilities, but for the sake of most individuals, they would qualify. There's a question on here that we just got in regarding mental illness is approved now as a diagnosis, but will be in 2026. So to clarify that, yes, it is an approved diagnosis now, but that diagnosis had to be received by their 26th birthday. So and some of the individuals I've run into, they might have had, for example, military service. They had an undiagnosed PTSD. They got out, they're 45, and now they get a diagnosis. They wouldn't qualify for ABLE, even if that PTSD, since it wasn't diagnosed till later in life. So there are individuals who, if they're diagnosed in their teens or 20s, they would qualify. But I know sometimes just mental illness in itself could be diagnosed at a later age. And so hopefully in 2026, when that age of onset increases to 46, we'll be able to see a great amount of people in that category now able to utilize an ABLE account. So hopefully that clears it up for you, Kathy. All right, so that's who's eligible. And we talked a little about the ownership. It is the individual with the disability. This is their account. They own it. But we know not everybody has the capacity to open the account, whether they choose not to, or maybe they do lack capacity. And so they can have what we call an authorized legal representative. This is the authorized signatory on the account. So you think of signatory like a bank, they're the ones that's going to be able to make transactions. These are individuals such as a legal guardian, power of attorney, but it could also be familial, like a parent, spouse, sibling, grandparent, even to the point where the last one, this is a hierarchy that the IRS and the Treasury had put out, but a representative payee under Social Security Administration. So if your loved one is on SSI or SSDI, or if you're an agency serving those as a rep payee for individuals in that capacity, you could actually set up and establish these accounts. And it'd be helpful for me, Dina. I'm assuming, are most of the individuals on, are these family members? And I see some agency names I recognize on here.
Well, anybody is allowed to register. So, but
Okay.
it's geared for parents, self-advocates, caregivers. We just try to have a variety of topics.
Awesome. Yeah. So this is great. So it's family, if you're a family member, you can establish this on their behalf and run it. And so the process itself, we'll talk about that here in a few slides, but that's just the eligibility requirements. And one of the key benefits we see from a lot of individuals is being able to maintain public benefits. I don't have a poll here, but I'm assuming many of you might have somebody that's on iBudget waiver or receiving SSI or on the wait list. And if that's the case, the good news is generally funds in the ABLE account are disregarded when you're determining eligibility for Medicaid services, whether that be like state Medicaid plan, where it's the health insurance portion, or some of these Medicaid waivers like iBudget or long-term care. Those usually restrict individuals to a certain resource limit, how much cash they can have on hand. Generally, the funds in the ABLE account don't count towards that limit. Now, there were some concerns for a lot of individuals about, well, what happens if the person passes away? Does the state just come and take all that money. And so we made it clear in statutory law here in Florida that Florida's Medicaid would not file a claim on an ABLE account. Instead, after all outstanding qualified expenses are paid, including funeral and burial, then it would go to the beneficiary's estate. Now, their estate, if they're over 55, may be subject to a state Medicaid recovery. So that's something to consider if somebody's been on Medicaid for a while and they have a significant amount in their ABLE account and they're over the age of 55. So just something to consider. But if individuals are under 55, they don't have to worry about Medicaid estate recovery.
We have another question in the chat.
Okay, Kathy. See, Kathy, are you an attorney, Kathy? She's asking it says you're using the word generally won't affect Medicaid. What are the exceptions? I like this legal mind. So my attorney made me put that in there. That's funny. I'm seeing some comments here, but so the term we put generally, just in case there's situations to where maybe you had excess resources prior to having an ABLE account, and Medicaid went back and found that, even though you then since then have put it into the ABLE account. There's always those types of broad things. So we say generally just because if money is in the ABLE account or taken out of the ABLE account is disregarded. But if there's some situation where maybe an individual got an unplanned inheritance and it's income, because ABLE doesn't shelter income, and it sits in a bank account for a while, that could, and then you put that money in the ABLE account, Medicaid could go, well, those 2 months you had extra resources. So we just put in general because of those kind of, out of the ordinary type of examples. Plus my attorney said I had to put generally. That makes you feel better. All right, so SSI is a little bit different, right? SSI is a federal supplement program. Individuals receive that to help pay for basic living expenses. Usually it's individuals with significant disabilities, elderly, cases where maybe it's a single mom that's pregnant, those types of individuals. Helps pay for basic needs, food, clothing, and shelter. There are some additional rules when it comes to ABLE accounts to be considered. First of all, is how much money you can have in the ABLE account before it counts as a resource. And for SSI only,
first 100 grand doesn't
it's
count.
100,000. Yeah, the first 100,000 doesn't count.
This could be big in Brian's life if we had money.
I'm just muting people. I'm sorry. Yeah, so if somebody's not on SSI, these accounts can go up to actually 418,000. So something to think about. The other rule when it comes to SSI purposes is how you use the funds. Really, it keeps they really look at if you're retaining ABLE funds once you take the withdrawal out. So if you're retaining funds past the end of the month for housing or non-qualified expenses, that's going to count as a resource at the beginning of the month. So I think I have an example on the next slide, and we'll dig a little bit into that. Also, remember, ABLE accounts shelter assets and resources. They don't shelter income. So if an individual is getting unearned income or earned income, so maybe they're working a few hours at Publix or something like that, and they get their money directly deposited into ABLE accounts, that still counts as earnings. Maybe they get unearned benefits, so maybe they're getting benefits like SSDI from a parent who's retired, and they're getting some SSI, and they're like, well, if I put all the SSDI, then I'll get more SSI. That's ABLE accounts don't shelter those types of resources or that type of income. I'm sorry, they just shelter how much money you can have on hand. I always encourage individuals, though, if they are on SSI, it's a good read, good nighttime reading before bed. They're the program operation manual system. It's their Social Security's public-facing manual on how they're supposed to treat ABLE accounts. They have a whole section on ABLE. I know that's a pretty long URL link, so I tell individuals just type in ABLE and SSA POMS or ABLE and POMS, something like that, and you should be able to see it early on. if that gives you some extra details. But I want to talk about housing one, because what's unique, if you think about the purpose of SSI, is to help pay for housing. And so able accounts, and Social Security admit this, and attorneys love it, is it's almost kind of created a loophole for families that wanted to help for housing related expenses without impacting somebody's SSI benefits. So there's something called in-kind support and maintenance. So basically, let's say your loved one could have received the full SSI benefit of $915 or whatever it is now currently. But since you're helping pay their utility bill, or maybe you're paying their rent, that gets cut by a third. However, if you deposit that money into an ABLE account, and then the ABLE account pays for those housing related expenses, then they wouldn't be getting in-kind support and maintenance because that ABLE account money is theirs. So here's an example of how SSI says that you could do that. You just have to spend the money in the same month you take the withdrawal out. So here's an example of Amy needs to pay her May housing expense or housing expense in June, but she takes the money out in May. She deposits the $500 into her checking account in May, and then withdraws $500 in cash on June 3rd and pays her landlord. That's an acceptable expense, but it's a housing related expense. And since it was part of her account balance at the beginning of June, her checking account balance, they're going to count that as a resource. So ways to avoid having your housing related expenses count as a resource for SSI purposes, just have the ABLE account pay it directly. We have third-party check requests that you can do online or over the phone, and we see a lot of individuals doing that. So that's another great way to get your full SSI check. And that's why I usually encourage individuals, and that's primarily, you see how people get money out of their account. They're usually sending a check somewhere, or if they're making an ACH withdrawal, they're expensing it right away. I did want to call out, I've talked a lot about how ABLE accounts shelter resources. There is the Working People with Disabilities for people that are on the iBudget waiver who are looking to earn more without impacting their iBudget funds. And I see Mark Berry for some reason popped up on my screen now. Hi, Mark. But I don't know if you all know of anybody that's taking advantage of this. I know of a couple people. And if it's, from what I've heard, it's kind of like, you guess you're on it. They don't give you like a formal letter or anything like that. They just kind of say, okay, you're earning more, you're fine. You can keep your iBudget funds, but I know it can be a little tricky. But what it does is it allows individuals on iBudget, long-term care, or some of these home and community-based waivers to actually earn up to, and these are old numbers too, up to $4,000 or more a month, and have a retirement account without impacting their iBudget. Like I said, I only know of a handful of people actually on it, but it is a great way for people to earn more and keep those Medicaid benefits.
Yeah.
Awesome. All right, let's see. Oh, I got a question. Are there fees to send payments to third parties? No. And we'll talk about how the account works and if there's fees or anything. So we'll dig into that now. So how does an account work? So this is an online program. If you've ever done an online bank or set up a Facebook profile, or Instagram or TikTok or whatever, I usually tell people it's a similar type of thing, but we ask for a little more details. But you're gonna need an email address, date of birth, personal identification information of the individual that is being enrolled, as well as the individual, if you're managing on their behalf, your information as well. So think social, date of birth. We'll verify your identity via some questions about if you have a mortgage with XYZ company, or what color was your 2021 Honda Civic, those types of public credit information that's available that we look at. Banking information, we have a software called Plaid that you would just log into your bank account via the online portal. It connects your bank account and then a minimum of $25 to the ABLE account itself. And when you contribute those monies, what's unique is this is both a savings and investment tool. And so we try to design this to help individuals that want to save, invest, or do both. We have 3 pre-designed portfolios, a conservative, moderate growth. So those are risk-based investment products. They're kind of tied to the back end to a very broad mutual fund. And so we have conservative, moderate growth of those. But individuals who are looking to either just save only or to create their own type of portfolio, we have individual fund options. So a U.S. stock, U.S. bond by Vanguard, international stock through BlackRock, as well as a money market account. That's basically the state of Florida's money market account called Florida Prime, and an FDIC savings account through BNY Mellon. So, and I think the FDIC product, because it's based on the federal funds rate, which they keep jacking up, and I think it's earning close to 5% now. So not too bad right now. So we'll see if they lower it. But so you put money in the account, you select an investment. Now, who can all contribute? Anybody can contribute. The individual with the disability can put their own money in. Family, friends, businesses, organizations, anybody can contribute to an account. A trust, if somebody has a special needs trust, those we see a lot of special needs trust funding able accounts because it's less work on the trustee having to, be involved with somebody wanting to take money out to go out to eat. So there is some limits at 17,000 per calendar year can be attributed to an able account, and that's aggregate of all contributors. So if I put in 10,000, the family puts in 5,000, that's 15,000. So they can only put 2,000 more in for the calendar year, and so that resets each calendar year. But that is a limit. If an individual, there's a clause about able to work. So if individuals working and not saving for retirement, they can actually contribute above that 17,000. There's a handful of accounts that take advantage of that and have the means to do that. So that's something to think about. And as well as be able to roll over 529 college savings plan. So I know when we first launched, we saw a lot of these as families who might have had a loved one who thought they were going to be able to go to college, but realized maybe not. And so they can actually roll those funds over from a college savings plan into an ABLE account. An individual asked, can an IRA fund the ABLE account? It does have to be cash. It can't be a direct rollover. So in those instances, it would most likely have to be liquidated, and whatever fees are tied to depleting a retirement account would have to be assessed, whatever taxes are, and then the remaining funds could be contributed to an ABLE account. But you can't do a direct rollover of an IRA or a Roth IRA for that matter. All right, so anybody can put money in. We even made a little gifting portal. So if families have, if they, maybe their son, daughter, loved one has a social media page and they have a following, they actually have this little cool URL that you can create a unique gifting page, kind of like a GoFundMe page, so people can contribute to individuals' ABLE accounts directly online. So, and they can do that via debit card or ACH transfer. So just a fun way. I used to joke, I have a friend of mine, he was probably the second or third account to get established, and he sends me a reminder on his birthday each year saying, hey, John, send me money to my ABLE account. And I said, your ABLE account, is almost as much as my retirement account. So I don't know if I want to give you any more money. You should take me out to lunch. Anyways. All right, now my favorite part. Okay, so money's in the account. It's growing. You're utilizing it. How do I get money out? What does that process look like? So it isn't, unfortunately, it's not as flexible like a checking account where I could go deposit a check and get that money out or cash that check. It does take some time. So when money's been sitting there for at least 5 to 10 days, that money can be withdrawn. It takes about 2 to 3 business days, depending on how you request those funds and when you do. But to get that money out, it's usually through a connected bank account. So that ACH withdrawal, it would go to one of those connected bank accounts. And an individual can request a check over the phone or online. There's no fees tied to check requests. And then finally, we do have an optional prepaid reloadable Visa card. It's managed by a third party called TrueLink Financial. It's a pretty robust system, but it can be a little complex. But it, I think about 8% of our account holders have that, and they like the flexibility, being able to load it with a set amount of funds, so maybe $500, $100, and then giving that to their loved ones so they can go shopping on their own. It has a PIN and can just accept anywhere Visa is doing it. Additional considerations when an individual does make a withdrawal is that it does have to be used for qualified disability expenses. We'll talk more about that on the next slide. But individuals can choose how they want that money to come out. So maybe they are using this as an investment tool and a savings tool, and maybe you don't want to touch the investment portion. You can actually just take money out of the savings portion. It does trigger tax documentations when somebody makes a withdrawal. It's called a 1099 QA. And so basically it's a reporting to the Treasury saying, hey, this individual had X amount of dollars taken out of their account, how much of it was earnings. And as long as you use those funds for qualified expenses, or you have enough qualified expenses for the calendar year, then there's no taxes on the earnings portion. So it's more of just for your benefit. I do see a question on here. It says, I understand that the beneficiary, if they're highly functioning, but cannot manage money, has the right to remove the authorized rep in the event they decide to. Is this true? If so, beneficiary could potentially liquidate the ABLE funds. Good question, Pam. And the answer is yes. So unless we get some type of documentation saying that the ALR is incapacitated, and most likely if they're incapacitated enough, then they probably wouldn't know how to fill out the correct form or call customer service. But actually, that's something we were talking about, and I actually have the form here on my desk. It's called Remove Authorized Legal Representative Form. And the beneficiary, if they have the capacity, so they're over 18, have the capacity, they just have to sign and get it notarized, provide an email address, and fill out the rest of the paperwork, send it in, and yes. So that is something to consider, though, right? Is if you have a loved one, if it's a child, they turn 18 and they're aware that they have an ABLE account, they have the capacity to take over this account. So that is something to take into consideration. If they get a hold of it. So yes, it's one of those estate planning, talking over decisions on how you can best utilize that. So unfortunately, we can't. Unfortunately, depending on what perspective you take, these are not restricted accounts. So because the ALR are the beneficiary themselves, at the end of the day, they own the account. So you do have to keep that in consideration. All right, so qualified disability expenses, right? So we talk about taking the money out, using it for a qualified disability expense. This is a pretty unique category because people want to know, well, what can I use the money in the account for? And the Treasury said, okay, we'll give you 13 broad categories: health, housing, education, transportation, legal fees, funeral burial, assistive technology, personal supports, financial management. So very broad categories. They gave one example. Let's say you had an individual who needed help and guidance in the community. So a cell phone and a cell phone plan would help with that. That would be a qualified disability expense. And really the bar is that they always point back to is, as long as the expenses help an individual maintain or improve their health, independence, or quality of life, then it's a qualified disability expense. So we've heard of people using the funds to go on vacation, or modifying their home, or helping put a down payment on.
Come out, please don't. Come on the meeting.
So putting on legal fees, for example, helping set up a special needs trust, all those would be qualified. So really, when you come to what's not qualified, it's probably an easier answer. And what's not qualified is giving the funds away. So unfortunately, you can't buy me a gift with your ABLE account. You can't, anything that's going to be negatively impact the individual. So tobacco, potentially alcohol, gambling is one that's not going to be qualified. But as long as you can justify it and keep those receipts when you make a withdrawal, why it's a qualified expense, then it shouldn't be issued. But the things I've heard of people using it, from equestrian therapy to making their child pay their portion of a vacation, to helping with home modifications to make it more accessible, or all kinds. I get a report monthly on how people use their prepaid card, and I can tell you a lot of people like online shopping, followed by Taco Bell and McDonald's. I don't know why, but those are qualified expenses. because it includes basic living expenses too. So pretty cool how people are using it. Predominantly, people are still savers with the money in the account. So there's a lot to take in, right? I'm looking for your questions as they come in. There's a lot of people say, okay, what is the cost associated with this? And what's unique is that we generally try to make this a free program. So there's no fees to establish the account. There are what we call investment administration fees. So depending on your investment selection, there's anywhere between a 0 to 0.29% annualized of the balance that's paid out in fees. The returns you see on the account are net of those fees. So you really don't even actually see those fees. It's just your return on your investment, or your FDIC option is net of those fees. And the FDIC product, we have no fees to it. So we make that a free product. If individuals do want a paper statement, I should update this, but it's a $10 annual fee for that. And so that's something I think you can always get electronic statements online, download those. And that Visa prepaid card does cost $2.50 per month, and that comes out of the balance of the card. So those are really our fees. Like I mentioned, since this is a state-run program, we have the backing of the legislature to get an appropriation to run this program. We try to make this the best value for Floridians. So no application fees, no monthly account maintenance fees, no paper check request fees, and we really try to do our best to administer this as best as we can through the Florida Prepaid program. And so Mark Berry put, John, could you please briefly explain how entity accounts for those who serve as rep payee for multiple individuals, especially how they get this started when establishing an entity account? Oh, look, Mark, you read my next slide. So I'll talk very high level on this since Mark asked for it, but I wanted to kind of give you just a picture where the program is right now. So as of May 15th, we have a little over 11,000 have enrolled in the program, 9,800 are active. Currently, those individuals have saved and invested $73.2 million, which it just blows my mind. I thought we would have a lot more accounts and a lot smaller amount, but we have less amount of accounts than I thought, and a lot of money. Of those accounts and assets, 753 of those accounts are managed by entities. And roughly of that 73, about 4.3 million is in assets of just entities. And we'll talk about what an entity account is here. Just nationwide, because we're just the state of Florida, but each state can set up their own ABLE program. Together, we have combined over 144,000 ABLE accounts. Missing over there, looks like, for a 0. And have 1.39 billion in assets under management across all the ABLE programs in the nation. So significant buying power, significant growth there. So let's talk high level about the entity. Basically, this allows entity organizations, so your ARC, that might serve as a representative payee for some other individuals, to say, hey, family members want us to set this up for our clients, or maybe our clients don't have a family member or another individual, and we can establish ABLE accounts on their behalf. It's a paperwork process. We actually just helped ARC South Florida recently get established. I see Karen joined. Hi, Karen. And basically what it does, it's a paper format. We identify who the controlling officer is, if they're going to appoint some agents to run over, to manage this on behalf of the agent. So we're going to get their identifying information. So sending in ID cards. The benefit of if an organization sets this up is that there's changeover of the agents. I know that can be turnover can be a touchy subject, but it's a quicker, seamless process to remove an agent or add an agent, and giving them access to the account. And so instead of having to go and change that across everybody, but what it looks like ideally is something like this, where you would have a dashboard with everybody that you oversee into one. To get started though, like I mentioned, we get some identifying information on the agency itself, who's the controlling officer, verify that they are a organization, find out who's going to be in charge of managing these accounts. When that paper application is submitted, it's also submitted along with at least one application of an individual that they want to open an account for. Unfortunately, it does take about 3 to 4 weeks for us to process all that paperwork and get it set up. Things though to consider though, if an organization is interested in doing this, identifying who's going to be in charge of managing this, how interacting with clients and then getting their funds. Is it all going to just be invested in the FDIC product? That kind of thing. So, and how you can bring an ABLE account to make it really person-centered planning, right? Getting them involved, saying, hey, maybe they want to go on a cruise next year, how they can put money in an ABLE account, what that looks like in order for that dream to come true. So, and then how they're going to get money out, and who's putting money into the account. Is it just going to be leftover SSI funds? Or are we going to provide this account information to family members so they can contribute either online or with a paper form to their account or a special needs trust? So a lot of things to consider, but it does a lot of benefit for individuals. I see I have about 2-3 more minutes to present real quick, but I wanted to provide everybody our contact information. We have a ton of resources on our website. If you want to know more about special needs trust or guardianship, we do some one-off webinars on that. So I always encourage individuals to check out our YouTube page as well. In case you didn't know, we have a promo going on right now for all new accounts who enroll by the end of June. We'll get $50. We'll put $50 in your account on your behalf just for giving it a try, because we really believe in this program. There's our contact information, and maybe you just have a one-off. If you go to our website under our contact us page, you can actually set up a meeting with me directly and we can discuss whatever is on your mind. And that's it. I want to answer this question. I did have some other questions about frequently asked questions. So in case we don't have a lot of questions, I have backup questions just in case. So one of the questions we got is, who could set these up in the Brandon area, Hillsborough County? So as I mentioned, this program is unique in that it's all done online. So visiting ableunited.com, hit open an account, and we try to make it as seamless as possible. It does take about 15 minutes. If you have questions, you can always reach out to customer service, and they can assist you with that enrollment process. But unfortunately, we're not like tied to a bank or a financial planner where you can just walk in and set up a meeting and do it. But if you set up a meet with me and you want to walk through it, I'll be more than happy to help you with that. Another question we got is, you said money can be withdrawn from the savings portion of the ABLE account. How can the savings earnings be added to investments to keep growing? Then would any money withdrawn be taxed? So we'll tackle this. How can the savings earnings be added to investments to keep growing? So when you make a contribution to the ABLE account, it's going to give you all the options that you can choose from. So whether that be the pre-designed portfolios, the individual investment products, or just the savings account, you get to kind of choose where you want that money to go. When it comes to the earnings, so the investments, they go up and down depending on the market. So there's like a what we call a net asset value that changes based on the market. As that grows, how much shares of that investment product you have stays the same, but the value of it changes daily depending on the market. The FDIC product is a little bit different. Instead, you're going to get a monthly deposit of interest like you would like a savings or an investment account, where you're going to see, oh, I made $1.50 this month or $4 this month, and that's going to be deposited into your account. It doesn't count as earnings because it's part of the ABLE account, and so that's how you can kind of track it. And taking money out of the account, right, is not taxed as long as it's used for a qualified disability expense. So keep that in mind. Adina, I see that you're unmuted. You want to read some of these questions for me so I can get a drink of water?
Sure. Okay, so yes, we're going to send out John's presentation after the meeting to everyone that will have his contact information. So I know that was a question. We do have a question. My son is 19 and we don't have guardianship yet. Can I open the account for him and manage it?
Yes. So one of the unique things about the final regulations that came out from the Treasury on how states are supposed to run ABLE programs was they clarified that the term parent is familial in nature, right? So once you're a parent, unfortunately, I have 3 boys, you're always a parent, right? You can't get rid of them. They always come back. They're always going to be your child. So, so even if you don't have guardianship, and if they're like in their 30s, you're still the parent and can establish that account on their behalf. But since he is 19, that concept of if he's aware, has capacity, he could take over that account if he had the capacity to do so. So that's the only thing to keep in mind. But no, yeah, you can establish it as a parent.
So, and here's another, specifically, and I would imagine that on the ABLE website, are there different regions with people in certain counties that if someone is living, let's say, in Hillsborough or Escambia County, how would they set up the account or have a contact associated with their county?
So we're not regional based. We are Able United's for the whole state. We're not tied to a bank or a financial planning company. And so if you had a question, you would have to call customer service to get a hold of them. You could set up a meeting with me to discuss. But this isn't something where, unfortunately, you can't go into a local branch to run it. So I'm it for Able United. What you see, I'm the only staff that's in charge of this program, but I work with a lot of great vendors to make sure that people's needs are being met. So